Okay, everybody, welcome back to the next lesson. This is lesson 15 on volume. Essentially, what we're going to talk about now is it's an addition to what we've already spoken about on the charts, on order flow and tape reading. We're just going to put it into a contextual formula so that you have a pretty easy method or step-by-step system of recognizing if and when the power behind the price action or the order flow, as we've already discovered and categorized it as, if the order flow is doing something specific, creating the price action, and what the order flow is doing in context of the price action. That's what's important there. Okay, first we have the standard disclosures. You guys can pause that and take a look if you want to read them in detail, which obviously you should. All right, next, the goals for volume. Number one, understand how volume will start, confirm, or end a move. That's the part that you should write down out of everything that's going to be discussed here. The ideas or the scenarios to look at in volume are how they will start, confirm, or end a move. Now, I will say this. It's not always going to be screamingly obvious. It's not going to be like jumping out of a chart and saying, "Oh my God, look at that's perfect." It does happen that way sometimes. You have to use your chart reading skills in multiple time frames and look at volume in multiple time frames to determine if something is really obvious. But these are really solid time-tested rules for start, confirm, or end a move. Number two, to learn to recognize the clues volume leaves both on the charts and the tape. And the tape is for those shorter-term active traders who are actually watching the market on an intraday basis. And then more specifically, to understand that where that particular volume that we're going to learn to watch occurs during price action, a markup, a markdown, or a consolidation, or during that chart pattern is significant. So where it's happening on the chart is what's significant to assess the probability of the next move. And again, the key there is probability. Where our entire job is to set up the highest probability scenarios. All right, and the volume that we're going to cover now is a pretty good introduction to that. All right, so there's three types of volume that we're going to be looking for. There's the average daily volume of what a stock normally does, what the stock is actually doing today, and the volume trading right now. Okay, so we'll get into those in a little more detail. The average daily volume would tell you what a normal activity level for that stock is. So in other words, this is what a stock normally trades on a day-by-day basis. The whole point of paying attention to that should be very obvious. If a stock is significantly less than or more than what it normally does, that will tell you that you should increase or decrease the attention you're giving to that stock based on the fact that either more people are trading it and there's something going on, or nobody's trading it less than the average and maybe not institutional order flow there. All right, next, today's volume will tell you if it's trading on pace for the average and your activity level. So again, as I had just said, that today's volume compared to the normal volume or the average volume, those two things combined will give you a pretty good heads up of what you should be thinking about with that stock. All right, next and last, volume trading right now can be viewed in time and sales, and this will help you with routing orders as well as reading the tape. We're actually going to discuss reading the tape in a separate previous chapter, so you should have a pretty good idea on reading the tape there as well. All right, so again, a very important point that I keep bringing up, which I've already brought back twice. Not only monitor how much is occurring, but where it's occurring in price action. That's what I want you to write down out in the slide. How much and where. Okay? All right, first we talked about volume that starts a move. This is actually a chart from February in Cisco. And right out of the gate, at the beginning of the day, you can see a very significant increase in volume right out of a trading range from the prior day. So again, getting back to foundation candlesticks and order flow and taking out new levels. For the last hour or so of the day prior to that, we couldn't get out of this $21 level, give or take, and right out of the gate we shoot through there. And not obviously the stock's not moving a tremendous amount, but it's more paying attention to the volume starting the move, taking out significant levels. Next, we have volume that validates a trend, and if you remember what we said before in the accumulation distribution chapter in charting, Volume will validate a trend if it's significant or increasing in the direction of the order flow, and it will also validate the trend if it's decreasing as a stock pulls back or pauses. Remember we talked about accumulation, distribution, markup, markdown? Well, we had said that you can assume a stock will continue in the accumulation or markup phase, as long as you see light volume pauses. So you can clearly see here in this chart of VeriSign, even though it's an intraday chart, the same thing applies for the longer time frame daily charts. Lighter volume pauses imply continuation, and you can see that very, very nicely here. All right, and next we have what we call capitulation that we teach in the Active Trader program. And this type of volume will typically end a move, or at the very least be an alarm that there's a potential change of order flow here. And you can see on the bottom here a very nice spike in volume after a significant move to the upside. And if you'll notice, after that happens, reading the tape, price never trades out of that significant move. So if we were trading together, I would tell you, keep an eye on that capitulation and tighten up your trailing stops, because that most likely, again, nothing's 100%, it's more like an alarm, that is most likely the end of that buying pressure in that particular instance. All right, so to put these into rules or structure, as we've done with everything so far, volume should be significant for price action in the direction of the trend to validate that price action, which is what we went over in that VeriSign chart. Volume should decrease during a pause, and again, I keep wording pause so you're not looking for the absolute perfect flag or that kind of thing. Volume should decrease during a pause against the current trend for the current trend to remain valid. So in other words, it's a markup or a markdown until you see accumulation or distribution. That's the thing you want to write down there. All right, breakouts from consolidation should be accompanied by significant volume for the breakout to be valid. Makes sense, doesn't it? If it's a significant level and you're looking for order flow to take out new levels, you'd like to see institutions involved, and that's what that means. Next, significant volume during a pause is most likely accumulation or distribution. Even if you don't anticipate a reversal, be aware that something different is going on in the price action / volume relationship. That's the key there. Okay, accumulation or distribution, heavy volume pause is an alarm that something different might be going on. All right, volume should be monitored from the most recent prints that you see in time and sales to at least the last 20 trading days. You want to pay attention to how it's trading during the intraday levels as well as from day to day. Next, volume and liquidity will influence your activity level. Now, we discussed that in relation to the average daily volume, to how the stock is trading today relative to the average daily volume. And then if you take it all the way down to reading the tape or reading time and sales, if a stock is barely printing in level 2, you should probably not be involved because nobody else is trading it either. And the last rule here is a fast move a significant distance from the moving averages with increased volume typically will end that most recent momentum move, otherwise known as capitulation. Now, I will tell you this just as a little heads up. Capitulation is most easy to identify on a 5-minute chart or a daily chart. For some reason, the other intraday time frames, it's not as obvious. So 5-minute and a daily chart. All right, so volume considerations here. Number 1, volume combined with price action will show you if the idea behind the trend is still valid. And again, to make that idea comment a little bit deeper, the idea is the price action volume relationship. So in other words, if the trend, or as we've already called it, order flow, is assumed to remain intact as long as the volume traded in the direction of the trend is strong and the volume during the pause is light. Next, understanding the phases of price action, which we covered a couple of lessons ago, with volume analysis, with pattern recognition, with candlestick charting. Got really good solid tools there that'll provide you with a great foundation to make educated, higher probability trading decisions. All right, and that is the end of lesson 15 on volume. Have a great day, everybody. Any questions, please feel free to shoot me an email.